Well, good morning and welcome everyone. This was an open meeting of the Public Company Accounting Oversight Board on June 1, 2017. We want to welcome all of you who've joined us today in person or listening to the webcast of this meeting. Today, the board will take up a recommendation to adopt a new standard on the auditor's report and also consider proposing amendments to the standards on auditing accounting estimates, including fair value measurements and using the work of specialists in an audit. Before we proceed with the agenda, I want to note for the record that all board members are present. First order of business before the board today is a staff recommendation that the board adopt a new standard and related amendments to the PCAOB auditing standards that would provide additional information in the auditor's report. To present the staff's recommendation on this item, I will turn to our Chief Auditor, Mr. Martin Baumann.
Thank you. Good morning, Mr. Chairman and board members Harris, Ferguson, and Franzel. The Office of the Chief Auditor is pleased to recommend that the board adopt a new standard, the auditor's report on an audit of financial statements when the auditor expresses an unqualified opinion, and related amendments to PCAOB standards to provide new information about the audit and make the auditor's report more informative and relevant to investors and other financial statement users. Investors are the beneficiaries of the audit, and the auditor's report is the primary means by which the auditor communicates with them. However, as currently designed, the auditor's report conveys little of the information obtained and evaluated by the auditor as part of the audit. And while the auditor's report has generally remained unchanged since the 1940s, companies' operations have become more complex and global, and the financial reporting frameworks have evolved toward an increasing use of estimates and fair value measurements. As part of the audit, auditors often perform procedures involving challenging, subjective, or complex judgments, but the auditor's report does not convey this information to investors. As I said, the auditor's report hasn't changed much since the 1940s. Internationally, the form and content of the auditor report have undergone significant change. In recent years, several international regulators and standard setters, including the International Auditing and Assurance Standards Board, the European Union, and the Financial Reporting Council in the United Kingdom, have adopted requirements for expanded auditor reporting that go beyond the binary pass-fail model. We are now seeing expanded auditor reporting as the norm around the world. The standard in front of you would require, among a number of other improvements, communication of critical audit matters that would inform investors and other financial statement users of matters arising from the audit that involved especially challenging, subjective, or complex auditor judgment, and how the auditor responded to those matters. We believe that critical audit matters are likely to be identified in areas that investors have indicated to be of particular interest to them, such as significant management estimates and judgments made in preparing the financial statements, areas of high financial statement and audit risk, unusual transactions, and other significant changes in the financial statements. In short, I believe this new auditor reporting standard will make the audit report more informative and relevant, adding to the total mix of information that investors use to make investment decisions. Before I turn the floor over to Jennifer Rand and Jessica Watts to provide more information about our recommendation, I'd like to express my appreciation to the many people within the PCAOB who were essential to the development of this standard. First, I'd like to thank the team that led the project: Jennifer Rand, Jessica Watts, Elena Boshkova, Ekaterina Dizna, and Karen Wiedemann in the Office of the Chief Auditor. I would also like to thank our colleagues from other divisions for their significant contributions. In particular, Andres Vanelli and Patrick Castine in the Office of Economic and Risk Analysis, Gordon Seymour and Jennifer Williams in the Office of the General Counsel, and our colleagues in Inspections and Enforcement. Finally, I'd like to thank the staff of the Securities and Exchange Commission for their support and timely assistance. Jennifer?
Thank you, Marty. The final standard before the board today is supported by more than 6 years of outreach and public comment. The PCAOB commenced its standard-setting project on the auditor's reporting model in 2010 with outreach to different stakeholders, including investors, financial statement preparers, and auditors. Since then, the PCAOB issued a concept release in 2011, held a full-day public roundtable in 2011 to discuss comments received on the concept release, issued a proposal in 2013, held a 2-day public meeting in 2014 to discuss comments received on the proposal, issued a reproposal in 2016, and discussed changes to the auditor's report at numerous meetings of the PCAOB Standing Advisory Group and Investor Advisory Group. Additionally, the project has been informed by academic research and initiatives of other regulators and standard setters. The staff has taken into consideration all comments received, and we have worked closely with our Office of Economic and Risk Analysis to integrate economic analysis into all aspects of the rulemaking. We believe our approach responds to investor requests for additional information about the financial statement audit without imposing requirements that go beyond the auditor's expertise or mandate. The final standard we recommend for adoption is substantially the same as the board's 2016 reproposal. It retains a pass-fail opinion of the auditor's report, but makes significant changes. First and most significantly, the final standard requires communication in the auditor's report of any critical audit matters arising from the audit of the current period's financial statements. A critical audit matter is defined as a matter that was communicated or required to be communicated to the audit committee and that relates to accounts or disclosures that are material to the financial statements and involved especially challenging, subjective, or complex auditor judgment. To assist the auditor in determining critical audit matters, the final standard includes a non-exclusive list of factors for the auditor to take into account in determining whether a matter involved especially challenging, subjective, or complex auditor judgment. Examples of such factors include the auditor's assessment of risk and material misstatement, including significant risks, the degree of auditor judgment related to areas in the financial statements that involve the application of significant judgment or estimation by management, including estimates with significant estimation uncertainty, and the nature and timing of significant unusual transactions, including the extent of audit effort and judgment related to these transactions. The determination of a particular matter should be made in the context of a particular audit, with the aim of providing audit-specific information rather than a discussion of generic risks. Finally, communication of each critical audit matter includes identifying the critical audit matter, describing the principal considerations that led the auditor to determine that a matter is a critical audit matter, describing how the critical audit matter was addressed in the audit, and referring to the relevant financial statement accounts and disclosures. If there are no critical audit matters, the auditor would so state in the auditor's report. The final standard also includes additional improvements to the auditor's report to clarify the auditor's roles and responsibilities related to the audit of the financial statements, to provide additional information about the auditor, and to make the auditor's report easier to read. Such improvements include auditor tenure, a statement disclosing the year in which the auditor began serving consecutively as the company's auditor. Currently, information about auditor tenure is not required to be communicated to investors by the auditor, by management, or by the audit committee. We have seen a growing trend toward voluntary disclosure of auditor tenure, but the requirement to disclose auditor tenure in the audit report ensures that the disclosure is in a readily accessible and consistent location for all companies. It will also make auditor tenure information immediately available to investors upon filing with the SEC of a document containing the auditor's report. The final standard also includes an improvement related to independence. The standard requires a statement that the auditor is required to be independent. It includes an addressee to be included, such that the auditor's report will be addressed to the company's shareholders and board of directors or equivalents. Additional addressees are also permitted. The final standard includes some enhancements to basic elements. Certain standardized language in the auditor's report has been changed to clarify the auditor's role and responsibilities in the audit under existing audit standards, including adding the phrase "whether due to error or fraud" when describing the auditor's responsibilities under PCAOB standards to plan and perform the audit to obtain reasonable assurance about whether the financial statements are free of material misstatement. And finally, it now has a standard form of the auditor's report, such that the opinion will now appear in the first section of the audit report, and section titles have been added to guide the reader. I will now turn the floor over to Jessica Watts, who will describe the applicability of the standard to audits of certain entities, including the principal change from the 2016 reproposal, which is that requirements for CAMs will not apply to audits of emerging growth companies. She will also discuss the effective date of the standard. Jessica?
Thank you, Jennifer. In the 2016 reproposal, the board solicited comment on the applicability of critical audit matters to emerging growth companies. Many commenters supported applying critical audit matters to EGCs on the basis that the financial statement users would benefit as much or more as they would for other issuers. On the other hand, other commenters thought the cost of applying critical audit matters to audits of EGCs would outweigh the benefits. In addition, there is some uncertainty as to whether it is legally permissible under the Jobs Act for critical audit matters to be mandated for EGC audits. Primarily because of that uncertainty, we recommend excluding EGCs from the requirements of critical audit matters at this time. Similar to the 2016 reproposal, the communication of critical audit matters is not required for the audits of brokers and dealers, investment companies, except business development companies and benefit plans. In cases where critical audit matters are not required, auditors may choose to include them voluntarily. All other provisions of the final standard will apply to the audits of these companies. The final standard provides a phased approach to the effective date. Critical audit matters would be effective for audits of large accelerated filers with fiscal years ending on or after June 30th, 2019, and for audits of all other companies to which the requirements apply with fiscal years ending on or after December 15th, 2020. The remaining requirements of the final standard, including auditor tenure, will apply to all companies for audits of fiscal years ending on or after December 15th, 2017. This phased approach to the effective date will provide investors and other financial statement users with the new form audit report other than critical audit matters as soon as reasonably possible. The latter effective dates for critical audit matters provide accounting firms, companies, and audit committees more time to prepare for implementation of these requirements that are expected to require more effort to implement. A mid-year effective date for audits of large accelerated filers will allow auditors to gain experience implementing critical audit matters at a time when fewer audits are being conducted. For audits of companies that are not large accelerated filers, an 18-month delay will allow the auditors of these companies, which are often smaller audit firms, to benefit from the experience of the audits of large accelerated filers. Auditors may elect to comply before the effective date at any point after SEC approval of the final standard. Overall, we plan to monitor the results of implementation. In addition, the phased effective date may facilitate any post-implementation review of the impact of the final standard. In closing, the staff is recommending that the board adopt the new standard, the auditor's report of an audit of financial statements when the auditor expresses an unqualified opinion, and related amendments to PCAOB standards in substantially form presented. We recommend that the board authorize the staff to submit the standard and related amendments to the Securities and Exchange Commission for approval pursuant to Section 107 of the Sarbanes-Oxley Act, and to also request that the exception of the requirements, with the exception of the requirements for critical audit matters, the SEC approve the application of the new standard and related amendments to the audits of emerging growth companies pursuant to Section 103 of the Act. This concludes our remarks. We would be happy to answer any questions you may have.
Well, thank you, Mr. Baumann, Ms. Watts, Ms. Bolstrova, Ms. Dijna, Ms. Wiedemann. I also want to thank Anders Minelli and Patrick Castine in our Office of Economic and Risk Analysis, and Jennifer Williams in our Office of General Counsel. Investors have long called for enhancing the auditor's report, given the effort involved and the value the auditor brings to investor confidence. With the global economy, companies' operations have become more complex, and financial reporting frameworks have evolved toward an increasing use of estimates. As a result, auditors must frequently make challenging, subjective, or complex judgments. These evolutionary developments are the reason investors want more information about the auditor's work. The new auditing standard before the board today is the first significant change, as the chief auditor says, to the standard form of report in more than 70 years. It will make the auditor's report more relevant, more useful, more informative to investors and other financial statement users in light of the progress of history. The new standard will breathe new life into a formulaic reporting model. The standard before the board today is grounded in considerable outreach to investors, auditors, capital-seeking securities issuers, academics, and others, plus 3 extended public comment periods over a period of more than 6 years. It's backed up by a robust economic analysis of the impact of making audit reports more informative to our capital markets. In today's complex economy, and particularly in light of lessons learned after the financial crisis, investors in our public capital markets want a better understanding of the judgments that go into an auditor's opinion, not a recitation of the standard procedures that apply to any audit, but the specific judgments that were most critical to the auditor in arriving at the opinion that is before the investor. The new standard provides a clear, well-vetted description of what shall be included as a critical audit matter, or CAM, as well as a list of 6 factors the auditor should take into account in determining the CAMs to include. The standard envisions that auditors describing their critical audit judgments, it does not put them in the position of speaking for management. By focusing on auditor judgments, the new standard delivers on Congress's intention, expressed in Section 101A of the Sarbanes-Oxley Act, to further the public interest in the preparation of more informative audit reports for public investors. I'm grateful to the many investors, auditors, audit committee members, and others who took time to engage in the rulemaking process. Their comments helped us understand what is important to investors, as well as what auditors are best able to deliver to them. Today's vote could not have been achieved without the encouragement and support of the Commission's Chief Accountant, Wesley Bricker, and Deputy Chief Accountant, Mark Panucci. And today, to both, I want to express my thanks. Finally, let me reiterate my deep gratitude to the staff in the PCAOB's Office of the Chief Auditor, the Office of the General Counsel, the Office of Economic and Risk Analysis. Their indefatigable openness to research and analysis and their tireless attention to detail that made today's action possible. I want to turn now to my fellow board members for any statements they may wish to make, and we'll withhold questions, if any, until all board members have had a chance to make a statement. Then we'll have time for any discussion. I want to recognize Board Member Harris.
Well, Marty, first of all, congratulations to you and your staff. This has been a long haul and a direct uphill climb, and I want to commend you, Mr. Chairman, for your leadership, your dedication, and your perseverance in getting this done and to a final vote today. It's been a long period, and I think we reached a successful outcome. As a result of our action this morning, audit reports will become far more informative and useful to investors when they are making investment decisions. The history and the substance of the standard has already been covered, so I will be brief and ask that my full remarks be included in the record. As many have recognized, today's action is a direct response to calls from investors for the board to expand the auditor's report so that investors in the markets will know about the most difficult parts of the audit, and more importantly, about matters that might have kept the auditor awake at night. By adopting this standard, we are taking, as you pointed out, a meaningful step in carrying out a core part of our mandate, which under the Sarbanes-Oxley Act of 2002 requires the board, quote, to protect the interests of investors in the preparation of informative, accurate, and independent audit reports. I believe this is a meaningful improvement over the current pass-fail model, and investors will benefit greatly from it in the years to come. The Sarbanes-Oxley Act was enacted in the wake of accounting scandals at Enron, WorldCom, Adelphia, Tyco, and a host of other major U.S. companies. Reforming the audit reporting model became a priority in the aftermath of those events. It became still more important after the 2007-2008 financial crisis. During this time, institutions such as AIG, Lehman Brothers, Bear Stearns, Citigroup, and Washington Mutual received clean opinions from their auditors, despite reports of their being on the verge of collapse. In the aftermath of these crises, investors here and abroad asked, what did the auditors know and when did they know it? Adoption of this standard will help answer these questions in the future. Among its most important provisions is a requirement that auditors must communicate in the audit report any critical audit matters arising from the current period's audit, or else state that the auditor determined that there were none. The new standard includes a number of other improvements, such as a provision that the auditor declare that it is required to be independent, which is intended to reinforce the importance of independence to the auditor, an amended language that adds the phrase, quote, whether due to error or fraud, close quote, when describing the auditor's responsibility to plan and perform the audit to obtain reasonable assurance that the financial statements are free from material misstatements. I'm also pleased that under this standard, the audit report will disclose the year in which the auditor began serving consecutively as the company's auditor. This is a provision that investors have long asked for, since they believe that the auditor longevity is a factor that could compromise the objectivity of the audit. I believe that the new audit report could have a positive and transformative impact on the audit profession. By expanding the information contained in the audit report, auditors will be directly communicating with their primary client, the investor, far more meaningfully than ever before. By adopting this standard, the U.S. will also join other major countries that have moved forward in expanding their auditor's report. Still, I would be less than forthright if I did not point out some of the areas where I feel it falls short. For example, I believe that allowing auditors to decide what kinds of issues involve especially challenging, subjective, or complex auditor judgment is too subjective a test and creates too much discretion and not enough comparability across audits. I'm concerned about the difficulty of effectively inspecting against and enforcing compliance with such a subjective standard. There is no required discussion of CAM-related findings. Members of the auditor's reporting working group of the board's investor advisory group have noted that, quote, the board stopped short of mandating the one item that we believe would provide the greatest value to investors: the discussion of what the auditor found when it addressed the CAM, i.e. what were the results of the auditor's procedures in these areas, close quote. And I regret that critical audit matters are not applicable to audits of emerging growth companies, given that these companies present a greater risk than established companies to investors. In sum, I believe the adoption of this standard is a major, meaningful improvement over the current pass-fail model. Nonetheless, I believe the board and the profession have quite a long journey ahead to meet the expectations of the investing public. The board must also carefully monitor the implementation of this new standard to ensure that it does not result in boilerplate language, and that it is in fact, and it does in fact provide a clear information to investors. I want to pay special tribute to the PCAOB's Investor Advisory Group, which since its founding in 2009 has provided many ideas and perspectives about the audit report that are reflected in today's standard. For instance, among the changes suggested by the IG in 2011 was the one that would require the auditor to provide more disclosure about significant unusual transactions in areas of high financial and audit risk, along with how the auditor addressed these risk areas. Those ideas are reflected in the standard we are adopting today. In conclusion, I would like to once again thank the various offices, as you have, of the PCAOB who have contributed to this project. I would also like to thank Wes Bricker, the SEC's Chief Accountant, and Mark Panucci, Deputy Chief Accountant, for their significant contributions to this project. And finally, Mr. Chairman, once again, I want to thank you for your leadership on this issue. We are here today due to your perseverance and dedication to seeing this project to its final adoption. Thank you.
Board Member Ferguson.
Thank you, Mr. Chairman. I have a long statement here, which I'm not going to torture you with having to listen to it, put it in the record. Said I'll just talk briefly about this. And if I'm going to start off by congratulating you, Marty, and Jessica, Jennifer, Karen, Katerina, and Elena, for really quite extraordinary work here, as well as Andres and Patrick and Jennifer, the Office of the General Counsel. This has been quite an extraordinary effort. I mean, the PCAOB started this in 2011, but the calls for greater transparency in the audit report go back as far as 1978. Virtually every expert commentator that ever looked at this issue was calling for a more descriptive audit report that would inform investors of what was really going on in the audit. And along with the transparency report that we issued some time ago, I believe that this standard, which now will include critical audit matters, there will be descriptions of the personnel in the audit, the firms that substantially participated in the audit, and the tenure of the auditor, now give the investing public information about the audit and who has performed it that was not previously available without either great effort, if it was available at all. I'm also aware that this standard does not go as far as some people would like us to, but I have become convinced that it strikes the right balance. That as I looked at these issues and thought about them more and more, it became very clear to me that it was important that we leave in the provision of original information in the hands of management, and that it was very important to avoid dueling disclosures between auditors and a company's management. That was an unsustainable system. In this result, I believe what happens is the auditor talks about what the auditor does. That will give investors a clue as to the areas of the financial statements that they should look at, to the kinds of questions they might want to ask management, but it leaves the provision of original information in the hands of the companies where I think it frankly belongs. I have been concerned that anytime you come up with a requirement for things like CAMs, that there is a tendency for that to deteriorate into boilerplate, because large accounting firms in particular, for a variety of reasons, will have a very strong tendency to try to standardize this language. I think you've also struck exactly the right balance on that, though, by requiring the CAMs to be audit specific, to be tied closely to the facts that are being audited, the facts of the particular case. I think that will prevent these from degenerating into boilerplate. And I also believe that the fact that different firms will come out with different kinds of descriptions is likely to create a much richer environment of disclosures. That appears to be the case in other countries where this is now beginning to appear in audit cases, and I think it'll be the case here. So I think at the end of the day, we will end up with a much richer environment, and an environment in which investors and other users of financial statements will have much more information and much more understanding of what the audit process has been. And I think that's both a laudable and a quite remarkable achievement that you've done. It also brings the U.S. in line with international standard setters and where the auditing profession around the world seems to be going. I believe that's a good thing as well. So I want to thank you for all the work you've done. I also want to thank our colleagues at the SEC who are always helpful in constructing in this standard, have been working with us all the way through. So congratulations on getting this done.
Thank you, Luce. Board Member Franzel.
Thanks. I support today's vote on the adoption of a new standard that makes the auditor's report more informative and useful by requiring auditors to communicate additional information about the audit of the financial statements and by making other improvements to the auditor's report. The standard and amendments presented today should result in investors receiving more information about the unique aspects of each financial audit and should help clarify certain of the auditor's responsibilities. In doing so, this new approach should also spur subtle changes in the mode and nature of communications between auditors and audit committees and public companies and investors, and I think that will be healthy for the markets. The board has refined the concept of a critical audit matter in successive proposals, as we've heard, and I'm not going to reiterate the current requirements. But I do believe that the CAM aspect of this proposal takes a practical, common sense approach that will achieve the intended benefits. So I congratulate the staff, and I know this has been a long, multi-year project. I think we needed to take that time, though, to get to the answer that we have before us today. This standard is also similar in concept to enhanced auditor reporting, recently adopted by international standard setters and other non-U.S. regulators. And so I think it's good that we're moving in the same direction here. I'll note that evaluating the overall effect of new standards is very important as part of economic analysis of regulatory decision making. So I would encourage academic research on the impact of this expanded auditors reporting in the U.S. environment as the standard is implemented here, as well as in the international environment as similar requirements are being implemented in other countries, so that we can learn more about the impact of this standard, what works well, and maybe what other things might need to be changed or guidance that might need to be given going forward. There are also a number of other changes in the standard auditors report as part of this proposal, and I think many of them are good changes to clarify the report, and I'm pleased to see that those will be coming effective earlier than the CAM requirements, which are more complicated. There's one new requirement, however, with which I have expressed skepticism about its usefulness and appropriateness in the auditor's report throughout the course of this project, and that is the requirement for disclosure in the auditor's report of the duration that the auditor has been auditing a public company. The adopting release expressly disclaims any relationship between an auditor's tenure and either audit quality or auditor independence. The rationale for disclosure in the audit report is to provide the information in a readily accessible and consistent location to reduce search costs for investors and others who seek the information. I am concerned, however, that including this information in the auditor's report may convey an implication that there is a generalizable relationship between auditor tenure and audit quality and/or auditor independence, and these assumptions may not be valid. If information about auditor tenure is important and relevant for investors and other users, I support an analysis of alternatives for the best party to make the disclosure and the mechanism for doing so. So I would encourage more study and evaluation on this matter. In the meantime, I would encourage academic researchers to look into the impact and usefulness of the auditor tenure disclosure as it becomes implemented as part of this standard, so that this type of analysis can be done going forward. Finally, we're not done yet. There's additional actions needed by the PCAOB board related to auditors reporting. The board action today does not address the issue of the auditor's responsibility with respect to other information that accompanies the financial statements. This issue was originally included in the 2013 proposal, but the staff has added this issue to its research agenda as the topic of the auditor's role regarding other information and company performance measures, including non-GAAP measures. As part of this project, we'll have an interdivisional team working on this to determine whether we need a change to PCAOB standards or other regulatory approaches in this area and make recommendations to the board. In my view, this is a very complex and important project, and I look forward to working with the staff further. And I certainly understand the reasons why these two projects needed to be separated. They were both very large and complex, and so I look forward to seeing the staff's work on the second part of this project that was originally proposed jointly in 2013. So in closing, I repeat my support for the new standard and the related technical amendments, other than the one exception that I noted. And I would like to join my fellow board members in congratulating the staff. This has been a very long haul. Congratulations, and also thanks to the SEC for also providing much guidance and support throughout the process.
I'm not sure, given what board members have said, that there are questions about a proposal that has been formulated for 6 years and gone through a reproposal, but I don't want to chill discussion. On the other hand, I really would ask whether board members are ready to vote.
I'm certainly ready to vote.
Yep.
Will all board members supporting the proposal and in favor of approving the recommendation, please say yes.
Yes.
Any opposed, please say no. All votes are unanimous. Congratulations. We will move to the next item of business.
Thank you.
While the staff changes chairs and moves forward, the next order of business before the board today are staff recommendations that the board propose for public comment for a comment period ending on August 30, 2017. Amendments to its auditing standards relating to auditing accounting estimates and to the auditor's use of the work of specialists. Standards relating proposals for standards relating to the auditing of accounting estimates and to the auditor's use of the work of specialists. And to prevent the staff's recommendations on these items, I will again return to our Chief Auditor, Martin Baumann. Mr. Baumann.
Thank you again, Mr. Chairman and board members. So I'm now pleased to present two proposals for auditor performance standards in areas vital to audit quality. First, auditing accounting estimates, including fair value measurements, and second, the auditor's use of the work of specialists. These two proposals were developed in tandem so that the proposed rules can work together. For example, when using the work of a specialist in auditing accounting estimates. The first proposal would update and strengthen the standards for auditing accounting estimates and auditing fair values. We'll refer to both of these today as estimates. Accounting estimates are pervasive in financial statements of both large and small companies. These estimates often involve management's most subjective and complex judgments, making them susceptible to error and management bias. Thus, in many audits, estimates present a heightened risk of material misstatement and demand a critical evaluation of both positive and negative evidence and a consistent application of professional skepticism. Auditing accounting estimates has proven challenging to auditors, as evidenced by our inspection results. This proposal should prompt auditors to be more diligent and skeptical as they face those challenges, which can improve audit quality in this important area. The second proposal would strengthen and enhance PCAOB standards regarding the use of the work of specialists in audits. As estimates have proliferated in financial reporting, so has the use of the work of specialists. Today, companies and auditors use a variety of specialists, including, among others, valuation specialists, reserve engineers, and actuaries. As the use of these specialists has grown in frequency and importance, some audit firms have enhanced their practices, employing their own specialists to critically evaluate the work of the company specialists, while other firms directly use the work of the company specialists and perform more limited procedures. If the work of the company specialist is not appropriately evaluated, or the work of an auditor specialist is not appropriately overseen, there is a risk that a material misstatement could go undetected by the audit. Compared to current standards, the proposal on using the work of specialists requires more auditor involvement in evaluating the work of company specialists, particularly in higher risk areas. And the proposal provides better direction on supervising the work of auditor specialists. Both the estimates proposal and the specialist proposal are the result of extensive research and outreach. The project's teams have gained deep insights from working with our colleagues in inspections and enforcement, studying academic research, and conducting outreach to investors, auditors, preparers, specialists, pricing services, academics, and others, including issuing staff consultation papers and holding discussions with our standing advisory group for both projects. In addition, we have worked closely with our colleagues in the Office of Economic and Risk Analysis to integrate economic analysis into all aspects of the rulemaking and the proposing release. Before turning to Barbara Vanich and Lisa Calandrello to present the proposals, I'd like to acknowledge some people within the PCAOB who played key roles in developing the proposals. First, I'd like to express my appreciation to the staff in the Office of the Chief Auditor on these two projects. Keith Wilson and David Hardison worked on both projects. Barbara Vanich, Dominika Taraskevich, and Nikki Adesoy on the estimates team, Lisa Calandrello, and Mohamed Salvanov on the specialist team. I'd also like to thank our colleagues from other divisions for their significant contributions, in particular, Andres Vanelli and June Sukli in the Office of Economic and Risk Analysis, Elizabeth Echternak in the Division of Registration and Inspections, and Gordon Seymour and Jennifer Williams in the Office of the General Counsel. Finally, I'd like to thank the staff of the Securities and Exchange Commission for their support and timely assistance with this project. Now, Barbara will present the estimates proposal, then Lisa Calandrello will discuss the specialist proposal. That's good.
Thank you, Marty. The proposed auditing standard, auditing accounting estimates, including fair value measurements and the related amendments, would both enhance and strengthen the requirements for auditing accounting estimates under PCAOB standards. I would like to highlight a few key features of this proposal. First, this proposal would replace 3 existing overlapping standards developed over the years with a single standard that streamlines and strengthens the direction to auditors in this important area. Specifically, the proposed standard would replace AS 2501 on auditing accounting estimates and would supersede AS 2502 on auditing fair value measurements and AS 2503 on auditing derivatives, hedges, and investments in securities. Second, this proposal builds on the 3 existing approaches to auditing estimates that auditors are familiar with: testing the company's process, developing an independent expectation, and evaluating evidence from subsequent transactions and events. The proposal enhances the requirements for those approaches by, for example, providing additional direction on developing independent expectations depending on the source of information used by the auditor to develop that expectation. Third, this proposal requires a robust risk assessment of a company's accounting estimates and an audit response tailored to the assessed risks, whether they relate to subjectivity, complex processes, or the risk of management bias. The proposal also includes an emphasis on applying professional skepticism. For example, the proposal requires the auditor to address in the brainstorming session how the financial statements could be manipulated through management bias. For the auditor to consider in identifying assumptions for testing the assumptions that are susceptible to manipulation or bias, to consider in evaluating the company's process to develop an estimate whether the company has a reasonable basis for its significant assumptions. To understand for a company's critical accounting estimates how management analyzed the sensitivity of its significant assumptions to change when evaluating the reasonableness of the company's assumptions and the potential for management bias. And in developing an independent expectation of an accounting estimate, for an auditor to have a reasonable basis for the assumptions he or she uses. Fourth, this proposal updates PCAOB standards in light of developments in auditing practices for fair values of financial instruments. For example, auditors' evaluations of information from pricing services have grown more important over the years, yet the subject is lightly covered in current standards. This proposal contains an appendix on auditing the fair values of financial instruments that addresses, among other things, the auditor's use of information from pricing services to promote a proper evaluation of that information that builds on existing requirements for evaluating the relevance and reliability of audit evidence. Lastly, as Marty said, this proposal is designed to work with the companion proposal on specialists, which Lisa will now discuss.
Thank you, Barb. The proposal on specialists would enhance the requirements for the auditor's use of the work of company specialists and for the supervision of auditor specialists, whether employed or engaged in audits under PCAOB standards. Currently, 2 PCAOB standards primarily apply to the auditor's use of the work of specialists. The General Standard on Supervision, AS 1201, applies to auditor-employed specialists. Another standard, AS 1210, applies to the use of the work of company specialists and auditor-engaged specialists. This is an odd pairing, since company specialists and auditor specialists have fundamentally different roles. Specifically, A company specialist performs work that is used by the company in the preparation of the financial statements, and that may be used by the auditor as audit evidence. Whereas an auditor specialist performs work to assist the auditor in obtaining and evaluating audit evidence. Furthermore, the two fundamentally different approaches apply to the use of auditor specialists depending on whether they are employed or engaged, even though they do the same work. The proposal addresses this situation and improves PCAOB standards in two ways. First, by establishing a uniform, risk-based approach to testing and evaluating the work of company specialists in amendments to the standard on audit evidence, AS 1015. The proposal would require auditors to, for example, evaluate the data, methods, and assumptions used by the company specialist. Importantly, the amount of required audit effort to evaluate the work of the company specialist will vary based on four factors: the risk of material misstatement, the significance of the specialist's work to the auditor's conclusion, the professional qualifications of the specialist, and the susceptibility of the specialist to company influence or bias. The second way the proposal addresses this situation is by establishing a common supervisory approach for auditor specialists, whether employed or engaged, by amending AS 1201 and replacing AS 1210 with new requirements for using the work of auditor engaged specialists. The proposal provides more direction on how to apply the general supervisory principles of AS 1201 to the supervision of auditor specialists, whether employed or engaged. The proposal also has tailored requirements in certain areas where it is appropriate to differentiate between auditor employed and auditor engaged specialists, such as evaluating the qualifications of these specialists. I'll now pass the presentation over to Keith to present our recommendation.
Thanks, Lisa. The staff recommends that the board issue the proposed auditing standard, auditing accounting estimates, including fair value measurements and related amendments, and the separate proposed amendments to auditing standards for auditors' use of the work of specialists in substantially the form presented for public comment through August 30th. That concludes our prepared remarks. We'll be happy to answer any questions you might have.
Thank you, Mr. Wilson, Ms. Vanich, Ms. Calandriello, Mr. Hardison. I also want to join Marty in thanking others in the Chief Auditor's Office who worked so hard on these projects, in particular Dominika Tarashkovich, Nika Evasoya, and Mohamed Salmanov. And I want to thank Andres Vanelli and Jean-Suk Lee in our Office of Economic and Risk Analysis, Elizabeth Esternach in the Division of Registration and Inspections, as well as Jennifer Williams in our General Counsel's Office. Financial statements have always incorporated accounting estimates, but as our financial reporting frameworks have evolved, we've seen the use and reliance on estimates grow. Estimates help investors understand value and expected future value. Because they necessarily involve judgment, they are particularly challenging as an area for auditors and as evidenced by our inspection findings. Many companies use specialists, such as actuaries, reserve engineers, valuation specialists, to assist in providing information used in preparing their financial statements, especially accounting estimates. The proposals before the board today on auditing accounting estimates, including fair value measurements, and on using the work of specialists, were developed together because of the close relationship of the subjects. Both proposals have been informed by extensive staff research and outreach, including 2 PCAOB staff consultation papers. Proposed revisions to our existing standards in these areas are intended to make the auditor's opinion more reliable. The proposal on accounting estimates would replace 3 existing overlapping standards with a single standard updated in light of changes in practice, such as the use of pricing services in the valuation of financial instruments. The proposal on specialists would impose a more uniform, risk-based approach across audit firms regarding the use of the work of company specialists and of auditor specialists. It reflects certain best practices we've observed in our oversight activities. This is an important point. In many cases, we have observed firms employing many of the practices described in these proposals as a way to comply with the board's existing risk assessment standards. The proposal on using the work of specialists would also address identified risks in the use of the company's specialists by enhancing the auditor's involvement with such specialists or restricting their use. I look forward to public comment on these proposals. And again, this morning, I want to thank the PCAOB's Office of the Chief Auditor, the Office of General Counsel, and the Office of Economic and Risk Analysis. And I also want to thank Chief Accountant Wesley Bricker and Deputy Chief Accountant Mark Panucci and their staff who work closely with the PCAOB staff on this project. And I will now turn to fellow board members for statements they may wish to make. We'll follow the same procedure as usual. Mr. Harris.
Well, I also want to commend the Standards Division and everybody involved, and you, Mr. Chairman, and my fellow board members. This has been an extraordinarily productive and positive day. Both of these standards have been on the agenda for a very long time, and I appreciate the fact that we're taking them up and voting them out today. And as I say, I know that it's been a very long haul, and with respect to the two that we're considering before us today, it will be ongoing, but nonetheless, I'm extremely supportive. As noted in both releases, accounting estimates and fair value measurements are more prevalent and significant in today's financial statements than ever. These estimates often have a major impact on a company's reported financial position and results of operations. Because these estimates often involve subjective assumptions and measurement uncertainty, they are susceptible to management bias. Thus, these accounts usually comprise the areas of high risk in an audit. Accounting estimates also often involve complex processes and methods. As a result, companies often turn to specialists for assistance in developing accounting estimates or performing assessments of assets. In turn, auditors' use of specialists during an audit has also increased. This trend is likely to continue. This increased prevalence of accounting estimates and use of the work of specialists by management and auditors amplifies the need for today's proposals. Auditors do not appropriately evaluate management's estimates and properly oversee the work of specialist work. They may perform an insufficient audit, potentially harming investors. Both proposals protect investors' interests by strengthening the procedures auditors perform when testing accounting estimates, evaluating the work of a company's specialists, and supervising the work of the auditor specialists. As the proposing release related to the accounting estimates notes, the PCAOB continues to identify high rates of audit deficiencies in this area. We're not alone. The International Forum of Independent Audit Regulators annual surveys have consistently noted high rates of deficiencies in the areas of fair value measurements since the inception of the survey in 2013. These findings and the auditing difficulties observed by the PCAOB due to the disruptions in credit and capital markets during the 2007-2008 financial crisis indicate a clear need for auditors to devote greater attention to their evaluation of accounting estimates. The proposed auditing standard prompts such auditor action by highlighting the risk of management bias and the need for the auditor to exercise an appropriate level of professional skepticism. The proposed auditing standard also strengthens auditing in this area by extending key requirements in the existing fair value standards to all accounting estimates and providing specific procedures for unique situations, such as using information from pricing services. I believe this proposal strikes the appropriate balance by outlining an appropriate framework while not being overly prescriptive and prudently aligns with our risk assessment standards. Investors were generally supportive of certain aspects of the approach included in the 2014 staff consultation paper, which this proposal builds upon. That said, investors continue to ask for greater transparency by auditors in this area, such as disclosure of the auditor's evaluation of management's estimates and judgments in the auditor's report. As noted by the Colorado PIRA, quote, there remains a significant expectation gap that needs to be closed through better disclosure and more robust auditing practices, close quote. Turning to the use of the auditor's use of the work of specialists, the proposal related to using the work of specialists covers two groups of specialists whose work may be implicated in an audit. Specialists engaged or employed by the company, and those engaged or employed by the auditor, as Lisa so appropriately pointed out. I support the board acting on this proposal as our inspectors has observed auditors too often accepting the findings of specialists without first evaluating their work. With respect to a company specialist, the proposed amendments improve the auditor's evaluation of the work of a company specialist by enhancing how the auditor tests and evaluates the data used by the specialist, and by also requiring the auditor to evaluate the significant assumptions and methods the specialist used. The latter is important because today the auditor is only required to gain an understanding of those assumptions and methods. Commenters, including investors, generally supported stronger evaluation requirements in their comments to the 2015 staff consultation paper on the topic. As noted by Brandon Reese of the AFL-CIO in his comment letter, or their comment letter, quote, more rigorous testing of the work of company specialists would reduce the risk of material misstatements, close quote. With respect to the auditor specialist, today's proposal calls for a uniform approach to supervising that work, which is an improvement from the current requirement. The proposed approach is appropriate considering the role and work of the auditor specialist is the same regardless of the specialist arrangement with the audit firm. Regarding the role of the auditor's specialist, certain commenters to the 2015 staff consultation paper would prefer that the auditor's engaged specialist be subject to the same independent standards applicable to the auditor's employed specialist. Independence is a key tenet investors look to when relying on the work of the auditor. In turn, when the auditor engages a specialist when auditing highly complex and subjective areas, investors appropriately expect that an individual or entity whose work is part of the audit to also be independent. I look forward to hearing more from investors on this subject of the proposal during the comment process. In conclusion, once again, I thank all involved in the project, and I'd also like to express my appreciation to the SEC for their significant contributions to these projects. Thank you, Mr. Chairman.
Member Ferguson.
Thank you, Mr. Chairman. I'm also not going to, again, read the statements I have. I want to express my gratitude to all of you on the staff that have done such great work on this proposal. You know, the area of estimates and fair market valuations has been one of the areas of most persistent and stubborn sort of audit inspection findings, not only in PCAOB, but as Steve said, in the IFER findings. For example, in the most recent IFER survey, where some 30 nations participated in that, fully 1/3 of the time that fair market value estimates were looked at, or management estimates were looked at, there were errors. There were findings. That's just too high. So I think putting these standards into a much more coherent form and recognize what is really important about looking and evaluating at estimates and fair market values is going to be very important here. And it seems to me you focused on exactly the right things. You focused on the risk that is inherent in the particular estimate, and that's consistent with our risk assessment standards. You will focus auditors on looking at the susceptibility of people doing these estimates to bias. And that's obviously extraordinarily important, particularly important when you're using company specialists. And finally, the constant reminder in here of the importance of professional skepticism is, I think, something you can't overestimate. I think that is something that needs to be said again and again and again and again and again, and reminding auditors that this is part of their job. They have to be, and sometimes it takes courage to do that. So I congratulate you on this standard, and I think it's going to go a long way toward potentially allowing us to deal with what has been an extremely intractable problem in auditing. So congratulations again.
Thank you, Louis. Board Member Franzel.
Thanks. I support the proposals before us today, both on auditing estimates as well as the auditor's use of the work of specialists. As we've heard, these areas often involve complex processes and subjectivity and judgment on the part of company management, and therefore high quality auditing is absolutely critical in these areas. Because accounting estimates and the use of specialists have become more prevalent and significant in financial reporting in recent years, higher quality auditing in these areas should benefit investors and other users of the financial statements across the capital markets. Strong auditing performance or procedural requirements, when appropriately designed and implemented, are a key element of audit quality. So I'm pleased to see these projects that specifically impact the performance of the audit and the auditor's action during an audit to move forward, and especially the emphasis on professional skepticism and reminding the auditor of some of the very important considerations that need to be taken into account when working in these complex areas. And frankly, the board's current standards don't take into account some of the changing practices related to preparing estimates, including the use of third-party pricing sources and other specialists by companies, and the related changes to their risks. And so I think this is a major update and major upgrade to the standards in these critical areas. These proposals reflect a lot of outreach and analysis, a lot of due diligence on the part of our staff, including monitoring the impact of changes and proposed changes made to the international auditing standards. And I want to commend the staff on these projects and the auditor's reporting model and other projects on their coordination with the international standard setters and the consideration of some of the international standards and the standard setters' work in the process of developing PCAOB standards and proposed standards. I think that we all benefit. The more heads working on this difficult problems, the better. I won't repeat the staff summary of all the specific improvements that are being proposed. I do look forward to hearing input from commenters. In some cases, this might significantly impact practice. There are a lot of good questions in the proposals, and so I would highly encourage commenters from all different positions to comment here. On estimates, really some of the fundamental questions about the proposed requirements. Do they respond to the relevant risks? And do they impose burdens that are justifiable in light of the benefits? And if not, what would be alternatives that we could consider? And do commenters agree that the alternatives that we considered but rejected are in fact that we did proper analysis there? With regard to specialists, I do believe that smaller firms and companies might be impacted more by a change in practice, and so I certainly look forward to comments there and I guess specifics from companies and their auditors about the types of changes in practice that the proposal might require, and on the other hand, though, the costs and benefits of those as well. So I congratulate the staff again, another long haul. Very pleased to see these projects moving on the agenda.
Again, after 2 consultation papers in the process, there may be no questions. Are there?
I have a question.
Ferguson.
Does this proposal make clear, and maybe I should ask about the role of whether or not an engaged specialist is subject to the PCAOB's jurisdiction as an associated person?
Let me just start off by saying that with respect to that, today engaged specialists by the auditor are not required to meet SEC and PCAOB independence rules, but are required to meet an objectivity test in existing standards. The proposed standard retains that, such that engaged specialists have to be objective. We asked questions about that in the consultation paper a couple of years ago and received a lot of comment with respect to that. I think we make it clearer in the standard what that objectivity has to be and how the auditor should think about that with respect to the use of an engaged specialist. But with respect to the rule on associated person, I didn't know if General Counsel's office wanted to comment any further.
Yeah, I just would say it would depend. The release is not explicit on this point because it doesn't affect the performance requirements, but and it will depend on the facts. But as a general matter, we would expect certainly employed specialists to be associated persons of the registered firm. That definition, as you know, is not restricted to accountants. It covers all professional employees of the firm. Conversely, company specialists, we would not expect to be associated persons of the firm. For engaged specialists, the analysis is a little more nuanced. I think we would typically expect the entity that is in a contractual relationship with the audit firm to serve as a specialist to be an associated person. It's possible the personnel working for that entity might not themselves fall within the definition. But again, that's it's going to depend on the particular facts. And again, it's not laid out in the release because we expect the primary practical implementation is, as you referred to, is just in the unlikely event we needed one of the people to cooperate as part of an inspection or investigation, there would be some responsibilities associated with that.
But the answer to that, if I understand what you're saying, is that it could be fact specific.
Absolutely. Yep. Yep.
Yeah, I do have a question, and it's really a follow-up on some of the comments that I made during my remarks, and that is the impact of the proposed changes to the smaller companies and auditors who might be relying on management specialists really for audit evidence. I agree that these standards need to be strengthened, but we also need to look at the changes in practice. So I guess if you have any insights into what or things you'd like to elaborate on in terms of what types of comments and data and input would be helpful for us to evaluate what might be a pretty significant change in practice for some firms and some companies.
Well, I'll just start off again, but I think your point you made is correct, that in some cases, auditors and small firms might be relying on company specialists, and certainly the auditor has to perform an audit and not the company specialist. So we spent a lot of time thinking about this and did change some requirements here. Let me turn it over first of all to Keith to talk about some of the thoughts we had about this and what we've described in the release and around the economics around that.
Yeah, as Marty said, this is something we thought quite a bit about, and as we were developing the proposal, I think it'd be fair to say that the highest impact would be in the scenarios that you're talking about, where the auditor is looking only to the work of the company specialists and have tended to apply very limited procedures in that category. The data we've seen so far suggests that that's a relatively small percentage of the audits performed by small firms, so there is sort of a limited applicability. But we did think about, in the 4 factors that Lisa talked about, we tried to set up parameters by which the most audit effort would be needed when it matters most, when those are very important estimates, when they're high-risk areas, when the specialist work is particularly important to the auditor's conclusions, then we would expect more effort. So we've tried to put some scalability principles, if you will, into the standard. As to input we'd be looking for, I think we've asked a series of questions in the release about the state of practice, about costs and benefits related to this. So we'd be very interested in hearing from smaller firms, smaller issuers about their experiences, and in particular any data that they could show to help inform our thinking going forward. Andres, do you have anything you want to add?
Sure. To the extent that, as Keith suggested, this disproportionately affects smaller firms, there's also the possibility that this rule may have competitive effects in the marketplace. To the extent that it affects the need for more of the work that firms that are currently relying on the specialists, it might result in smaller firms accepting fewer audit engagements that would require the use of an auditor specialist, and potentially such firms would be unable to take advantage of economies of scale and scope that larger firms might accrue. On the other hand, the impact on the auditors of smaller firms might vary, since auditors of smaller firms already have experience evaluating the work of the company specialists comparable to auditors, to the extent that it's comparable to larger firms. In addition, smaller firms have fewer engagements that actually use specialists or when a specialist is invoked, and we are very, very interested in knowing what commenters have to say and what data they might put forth in terms of the impact on cost, audit fees, and effects on competition in the marketplace, particularly for smaller firms and EGCs.
Unless there are further questions, I will ask that all in favor of approving the recommendations, please say yes.
Yes.
Yes. Those opposed, please say no. The vote is unanimous. That includes the agenda for today. There's no further business. The meeting is adjourned. Thank you. Board members, we have Gordon has an update.